Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Hi, Jim. Yeah, here we are. And Friday brings us together again with our listening audience out there in the internet.
Well, all around the planet we get questions for you, and one of our questions today is from George. He says, "Hi, Bob and Jim. Given all the debt in the world, I've noticed a few articles on gold revaluation to deal with debt, particularly in Europe. How would this work? What would the impact be on the U.S. and Canadian dollars? Do you see the Canadian government ever buying gold again? Perhaps they would just nationalize mining assets." Your friend, George.
Yeah, George, good wandering around through the marketplace. Yeah. Well, a gold revaluation could only happen if a currency was on the gold standard, where you change the conversion price. But I think I can explain what goes on here is that the great financial bubbles, of which we're on the biggest in history, and also I'll add that whether it was 1929 or 1873 or even earlier, each one was the greatest financial bubble in history. And the first was the South Sea Bubble in 1720. So decades ago, I sat down and did the work on them. And one of the things that happens with the bubble is that the real price of gold goes down. And that then forces the gold stocks to underperform the S&P, which this has happened. So anyways, the gold's real price is deflated by the CPI in U.S. dollar terms, has declined, but for the last 3 months, it seems to be setting a base from perhaps which we can get a rally, and I think so. Now, here we then step back, and again in history, is that one of the features of a post-bubble contraction has been gold's real price going up. And when the real price goes up, that sort of is a proxy for earnings improving for the gold miners, because their costs are low or fixed or whatever, and the real price of what they're mining is going up. So the gold business gets very profitable in a post-bubble depression. So, and this then would be, it's a multi-year thing with gold's real price going up. Now, here comes the irony, is that in order to get the gold, as I said, it seems to be basing now, but in order to get it to go up, it needs a financial crisis. And in a financial crisis, the S&P will come down, as the whole big board will come down, but it also bring down the gold stocks. So in order to get the next buy in gold, you have to suffer a major crack in the stock markets. And then on that, and we will have the technicals, at that opportunity, and we'll be able to get positioned, I'm sure. So because, as I said, a multi-year bull market for gold is going to be a lot of fun, and it'll include everything from the big majors to middle-sized gold companies to right down to exploration stocks. I figure some of the exploration discoveries could be outstanding. So that's what we're looking forward to on the gold side. Now, what would be the impact on the U.S. and Canadian dollar, both Canadian and U.S. dollars are not convertible, so it doesn't apply. Do you see the Canadian government ever buying gold again for the central bank? Yeah. I think what's going to happen is that as the real price of gold goes up, everybody will want to get in on it one way or another, and even central bankers can get beguiled by market forces, and they will find a reason to have gold as a reserve within the central bank. And throughout all of history, gold has been the foundation of monetary system. So, that would be fun to watch for. And now, or would they just nationalize mining assets? No, I don't think so, because with a contraction, I expect the politics will change from intrusion and centralization back to freedom of the individual and limited government. So, taking over mining assets would be kind of unlikely. And also, there's going to be a distinction here. One of the other characteristics of a great financial bubble has been that the copper's real price goes up, which it did on our bubble, and it also has spent it's come down, the real price for copper, and it's also for the last number of months appears to be just trading sideways. But the history I've got on copper in post-bubble contractions is it goes down for a long time, and also have let's do this one, Jim. Decades ago, to put together a chart on an index of mines and smelters in the U.S. from 1872, 1871 in there, and in the 1873 bubble, mines and smelting stocks became the favorites, and the index went up. It's something like 340% in 18 months. And there was also a copper cartel. I think the guy's name was Halts, and he had controlled enough of the mining companies that he thought that he had control over the copper. So everybody was in base metal mining stocks, and it reached a peak. And the peak, as I recollect, was about 440 on this index, and it had come from 100. And then it went, within a year or so, it was down to 150. And then later in the 1880s, the index of mining stocks, base metal mining stocks, was down to 20 from 440. So I think this is where we are now, because if you take a look at the mining stock ETF trades in the U.S., XME, it's had a similar percentage gain in a 18-month period, and it became excessive technically at the top. So I think, and of course everybody is in now because everybody's thinking that 1970s inflation is going to come back again, but it won't, because the key is that this is financial speculation, and when it fails, most commodities will head down. So, hey, Jim, our question got us into a good few points here.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your attention. More private jets are taking to the skies, creating a gridlock on the ground.
Yeah, part of the article included that the people who are wealthy enough found it a great way to travel without having to expose themselves to COVID on airliners and this sort of stuff. And and then I remember one a couple of years ago when COVID first became a hyped up fear, and all of a sudden everybody went to Sun Valley. There were all of them, hundreds of them, and private planes were chock-a-block parked at the airport at, I guess it's Ketchum. So, Sun Valley. I haven't skied there in decades, but man, it was the best for groom skiing that I ever knew of. It was great. And Jim, that was a long time ago.
Mm-hmm. Now, on the private jet front, Bombardier finally has a hit, Bob. Finally.
Oh.
The Bombardier 7500 executive jet is called the Ferrari of the skies.
Oh my gosh. Did they paint them red?
They could and they should.
Yeah.
I love Ferrari red. These new jets fly at up to 50,000 feet, so of course there's less air.
God, that's high.
That is high. And so you have less air resistance, which improves your fuel economy.
Yeah,
and
they get some pretty good efficiencies at those higher elevations.
And because of that, you can fly faster without breaking the sound barrier, which takes a lot of technical expertise and makes your plane very thin, so there's less resistance to the shock wave. So you can fly it faster because you're higher, and it has an extraordinarily large fuel capacity, so it can fly just about any route in the world that any major airliner can.
Yeah.
Yeah. So it's got long legs, high altitude, high speed. It's becoming the darling of the literally.
Oh, I'm going to read up about that one.
Oh, yeah, because as you know, I'm a very fond aviation buff.
Yeah.
And I could talk aircraft with anybody all day and then tomorrow. Another headline that is jet related. Major jet leasing company has launched a $3.5 billion claim for all the aircraft that are stuck in Russia and it can't get out.
Yeah. Oh, I think maybe airline travel could get back to in Russia, but I think Russian economy has had a financial shock, and in this kind of bubble environment, it's the financial shocks that eventually brings the whole house of cards down. So, yeah.
My suggestion for the seized oligarch super yachts is they need a place to put all those Ukrainian refugees.
That's funny.
Or perhaps target practice for NATO. Now,
good grief.
Let's see. Now we have a Russian brokerage firm has asked their central bank for a bailout. Well, I thought Putin got their stock market up and running again.
Yeah, they got their financial markets back, and the ruble got right back to where it was before the crack. But again, a major brokerage, I guess it's a major brokerage firm, in trouble and seeking a bailout. So Mr. Margin got them, and I can remember. In the 1825 bubble, as they experienced it in London, which was then the financial center of the world, there was a major broker, as distinguished from a merchant bank, Pool and Company, and that bubble peaked in England in June of the year, dithered around through the summer, and then was crashing in the fall. So in the crash, they suddenly discovered that they were in default, and so they went to the Bank of England, and the Bank of England, if I recall rightly, said, "Oh, this is serious because it's a major stockbroker." And by the time they got the accounts and everything together to decide whether to bail them out or not, the whole thing had slipped even further. Like if you take in that kind of a market, if it takes you 3 or 4 days to figure out what to do, it's too late. So the major and prestigious stockbroker in London failed on that one. So it's the way these financial markets work, with agencies where the whole of the financial market becomes over-leveraged, and the only way that an over-leveraged market can stay alive is to continue to rise. It starts heading down, and then you have problems. When Mr. Margin comes in and does his work, And of course, this seems to contrast with the job description of central bankers. These days, it appears that their description is to get all the accounts out of line and highly leveraged up, whereas the job description of the margin clerk is to get the accounts in line. And this is the reason why that a central bank cannot keep a speculative market going no matter how hard it tries. Because the moment you get the break in prices, the power shifts over to the margin clerks. So
yeah, there's very little publicity about it, but the U.S. stock exchanges, they're being supported by the Fed. It's buying ETFs to prop up certain sectors. The Japanese government's been doing that for the last 40 years.
Yep.
After their crash in the 80s. Japanese government is the biggest shareholder in Japan's 50 biggest companies.
Yeah, a central banker has to do something, and it'll do whatever seems fashionable at the time. And at one time, their exercise was to keep the economy going, and then they realized more lately that you have to support the stock market. And then also there's that kind of a sub-agency thing called the plunge protection team, where there's a certain number of billions of dollars there to intervene to provide some liquidity in the stock market. So you've got, I think, that at the president's discretion, and then of course you got the whole of the Federal Reserve as a plunge protection team, for God's sake. So yeah, this is going to be fascinating to see how it all works out.
Headline, riskiest bets on the stock market are the most popular. People are going for the touchdown. They're going for the grand slam, the big salami.
Yeah, they are indeed. You've got all kinds of financial games out there, ETFs and CDCs, and you got speculative product virtually in every field. Commodities, stocks, bonds, everything. There are essentially financial vehicles created to facilitate speculation in these things, and they had that with the South Sea bubble in 1720. They had all kinds of option strategies. Instead of calling them puts and calls, they were called puts and refusals. And the first financial market letter in London began publication in 1692, and by a guy by the name of Houghton. That was his last name. And he just, I don't know, maybe once a week or every 2 weeks, wrote up a financial paper on what was going on in the financial markets, and he'd have a list of quotes, and noted that one of the quotes was for Hudson's Bay stock, because that began, I think, in 1670, so this was 1690s. It was a popular trading stock. But he had, one of his papers was titled The Mystery of Buying More Than All. And what that was people trading options on a stock, and then insiders thinking they could pull off a squeeze, and they bought more options than were outstanding in order to trigger a squeeze. So anyways, Houghton wrote it up as the mystery of buying more than all. And you can do that with often with options or warrant deals on stocks. There's only so many outstanding, and oftentimes the market cap of all of the warrants is not that much, so ambitious insiders can put a squeeze on it. I was involved in one in Vancouver where we had expiring options. We bought more than all, hoping to squeeze the shorts, but hey, when the shorts are movers and shakers in the Vancouver Stock Exchange, forget about it. The rule would have been that the floor trader for the exchange would have moved and forced the buy-in, which would have drove the price of the expiring option warrants up. But of course they didn't. so they expired worthless. So our little game was worked out, but it was thwarted by insiders at the exchange saying, no way, we're going to follow our own rules. So when it comes to trading options and squeezes and buying more than all, forget about it. Just consider it as fascinating history.
The Hong Kong Stock Exchange halted trade in a few dozen companies, some of their very biggest, including Evergrande. Is this going to be the first crack in the Asian markets? And if there's big cracks there, will they spread to this side of the big pond?
Yeah, that's a fascinating story, Jim. I hadn't had a chance to read it yet, so I don't know whether it was due to the market cap or price getting below a certain rule at the exchange. I'll have to look into it. But it is, let's put it this way, it isn't good news, because it reduces the liquidity for whatever stock is being delisted or halt traded on. And so, yeah, as we've been saying for some time, the post-bubble contraction actually started in Argentina and Turkey a year ago, when they announced that their central banks had run out of liquidity and their local currencies had crashed and short rates had gone up. Typical crisis. And then, of course, the next stage was appearing in around June in China, with their problems. And then with the setback, the financial hit to Russia, I'm assuming that now Russia has joined the post-bubble contraction, and giving the linkages of everything these days, that's a threat to Eastern Europe, and the next thing you know, the contraction will hit London and New York. Who knows when, but I would guess that it would be inevitable.
Mm-hmm. The headline from Bloomberg on this was Hong Kong trading halts 50. Trading in 33 Hong Kong listed stocks valued at $15 billion was halted on Friday after a number of firms missed a deadline to report annual results.
Okay, there's the explanation. Yeah.
Yeah.
Because last week we had a headline that said that Evergrande, some of their units had missed a key financial reporting date. Now that makes sense.
Mm-hmm. So
they just don't have the money or the ability to keep their accounts up to date, and that is also part of a disaster. So,
well, as a friend of the show Danielle Park pointed out, there's 190 million vacant residential properties in China.
That's a huge number.
Yeah, like you may have 1.4 billion residents, but nearly 200 million empty apartments or houses. Yeah. That's incredible.
Yeah.
Those big giant.
Well, the number it sounds big to me, Jim. I think.
But anyway, it's just that's the problem.
The number is.
They built hundreds of those artificial cities with nobody in them.
The emptiness is amazing. Oh, it reminds of the line, the 1873 bubble in the U.S. and Canada. The big darlings included a boom in railroad stock. So everybody was building railroads from one place to another. And then the very wealthy Vanderbilt, after the crash, observed that it was pointless to be building railroads from nowhere to nowhere. And then, of course, this applies to all these apartment and condo units in China. They're building. It's pointless to build empty cities.
Well, the plan, I think, was to forcibly move people from overcrowded cities and from rural areas into these towns. But, Bob, the problem is they didn't have adequate infrastructure. They forgot to add things like universities and so on that attract intellectual talent.
It was too much too soon by central planners. Rather than seeding an area to get started and having it happen naturally, they just got everything going, and they're so where in 1873 they were building railroads from nowhere to nowhere, they've been building empty cities. And that is even more insane. So,
Well, another headline I saw here says 65 empty homes in China. But again, one of the problems with statistics with China, it's China.
Oh, yeah.
You never get an accurate number out of them. Because remember, for, a decade, China would predict 6.7.21% growth.
Yeah.
And a year later, it would be that exact number, not off by even a tenth of a percent.
They've been rigging numbers, as most governments will. I mean, the calculation of the U.S. Consumer Price Index is one of the weirdest things you ever saw, where they put in an adjustment called hedonic, and the adjustment is that computers have much more capacity for the cost than they ever had before, so therefore that brings the rate of inflation down. And inflation should be the cost of living, groceries, energy, rent, mortgages, and also the cost of living should include government taxation, which they don't include. So, yeah.
My guest has been Bob Hoye, market historian and chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, he loves to answer them. You can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.